Ladies and gentlemen of the crypto space, 11:29 on a Tuesday, September 22nd. I'm going to start this stream earlier and earlier because that'll get people coming earlier and earlier in preparation for the stream, getting their minds ready for this mind-blowing experience. Otherwise, you jump on at 11:30 and you're like, "Oh, he started and no one's ready for the craziness about what I'm going to verbally unleash." What's going on in the crypto? It's not even just the crypto space, ladies and gentlemen. That's what's so important. It's the financial system because in all regards, so many people, especially myself, the crypto space is part of the financial system. And if there's any distinction, or people are still thinking there's a distinction between the financial system and the crypto space, yeah, no, that's not the way it is anymore, ladies and gentlemen. Times are changing. All right, today's episode and all episodes going forward is sponsored by Change Angel, the swap exchange for social good. Non-custodial exchanges. Get if you want an asset and you're moving value to a centralized exchange like Binance or, I mean, even Bittrex. We've had a great history with Bittrex over the years, and they've done well by the community, or they've done well for the community, but it's still a centralized entity. And the whole point of cryptocurrency, the whole point of decentralization, the roots of the crypto movement are to get away from other people having custody of your assets, where we are in control. Not your keys, not your crypto. So start using non-custodial exchanges such as Change Angel, such as DeFi, where you put in and you get out from your wallet to your wallet. So all my support to Change Angel for what they do. And if you have an asset, and specifically like Change Angel for UTXO assets or non-Ethereum assets, and obviously Ethereum assets as well, but this is the perfect place to get away from the centralization. Plus, what are you people doing on exchanges anyway? The vast majority of people have no business on an exchange. You're not trading. Don't use an exchange to swap. Use an exchange to trade. An order book, limit orders, buys and sells, and all that fancy shit. The vast majority of people don't give a crap. What they want is input and output. Here's an asset. Give me an asset back. Change Angel is perfect at that. Let's pop it over to the big board. Well, I want to talk about Ren, Bancor, and Kyber because those bad boys were up over 1,000%. They were absolutely killing it. So that's clearly a very clickbaity title. I'm sorry. I pulled it out. I pulled out the clickbait. But whatever. We're here, and we're going to talk about that amongst other things. Who's in the chat today? Angelo, yeah, my man. Captain Weber's in the house. Good to see you. It's been a bit. RR, always a pleasure. Dave, what's up? I'm starting earlier, RR. Got to get people ready. Otherwise, they jump in on 11:30 and they're like, whoa, can't handle it. Noah's already out of the gate. Got to work people in. All right, let's do this. So, what am I seeing in the markets? You know, obviously, I tweeted a bunch about Tesla this morning. But let's talk crypto for a second. So, I'm seeing a shift in the markets. We're finally seeing a bit of a bottom, and we're seeing it in the charts as well. And we're seeing a bit of change in the equity space, maybe a top. So the vast majority of the equity space, or at least Nasdaq, is controlled by the tech sector. It was controlled by Facebook, Microsoft, Tesla, and these just massive, overinflated plays. So what I'm seeing is a bit of a climax in equities as well as in the crypto space. Now let's see how this plays out with regard to equities. So Tesla broke down, in my opinion, this morning. Broke through support, but it's holding on the 200 EMA, the 30-minute. But if this falls through the 200 EMA of the 30-minute, check this out. On the hourly, we're talking about that's a fair amount of a price drop, price range. So we're talking about another 5% to the downside. And at some point, we're going to get to this trend line, which is probably is 14% to the downside. Now, don't get me wrong. As I say it every single time, love Tesla, super bullish on Tesla. This is not Tesla. This stock, this chart has absolutely nothing at all to do with Tesla as a company. So this is straight up casino. It is gambling, and that's all it is. Okay? And that's a tragedy for the American United States stock market because that's what it's become. Has nothing to do with the companies at all. So how about them apples? Kim says, can you buy Ren? How much profit expected in the Okay, that's a very specific statement. I won't go as far as answering that, but I will talk about Ren. Let's get into the clickbaity title today. So Ren did double dip below its most recent trend formation. That was definitely a trend line. You can see the two touch points, and we dipped below. But surprisingly, for the past, right, it's about a day. It's hovering, so let's check real quick. Is there any EMAs down there? Yeah, how do you like that? Look at that. So it broke through trend formation. It's currently being pinched. So that's very common. So check it out on the shorter time frames. You'll see it looks like it broke trend, which it did, but then you pop out to the daily and you're sitting on the 200 EMA. Isn't that fascinating how these charts work? You're literally finding support in a line, and bam, there it is. So we're currently pinched between the 200 EMA on the daily and the previous support, which has not been not it was tested for resistance, but that held more or less. This is a very interesting chart. I wouldn't say bottom. I don't buy bottoms. What I would buy is this. Where's my little draw tool? What I would buy is this. So he broke down. I would let it rip up, fall, and I would buy probably right around here. You see where my mouse is? I would buy right around there. I wait for a bounce off the previous resistance, tested, flip support, and then I'd buy because this is a confirmation that this just held as support and it just bounced off of it. And that is a nice confirmation for pretty much something like this, just a continuation. Could it come down? Whoopie-doo, it'll go up, or maybe it'll come back down, but it'll go. Just continuation. This is absolutely the worst chart ever. Okay, here's a horrible example. Look for resistance flip support. This is a big support line right here, and that's quite exciting to see. And we haven't seen that yet. So Bancor is another deal. Bancor, check this out. It bounced right off of, let's pull up the other one. Right, pretty much bounced off the 0.786 fib. This is one of the most interesting fib retracement charts. I think I mentioned it the other stream because it has a very clear start. You don't really see starts like this. Like if you look at Kyber, which is another one that I mentioned, it's kind of like, is it down here? It's the start. So I like to look before the green guppies, but then again, really the start of all the bullish momentum was down here. So it's kind of strange. But with Bancor, it's very obvious. And maybe not so coincidentally, it bounced off the 0.786 fib. That is one heck of an obvious bounce. I mean, it didn't hit the line spot on, but that looks pretty darn good. So, depending on your risk profile for your portfolio, this is a good entry. Personally, I'm not going to get in. Right now, I have a particular sentiment, which I could share. Might as well share it now. My sentiment is that I was able to extract a couple 100% gains of my macro, the overall portfolio, my overall portfolio, since March. And I don't want to speculate at all. Now, obviously, there's a great deal of potential for this to go up. But I don't just want something that goes up. I want something that goes up with as little risk as possible. Now, clearly, Bitcoin and the likes of Steven Saylor and Michael Saylor and Raoul Pal, and what Tom Jessup said the other day on the channel. Um, Bitcoin fits into the macro narrative of the legacy financial system in a meaningful way. And that's really what I want. I want that type of narrative for my portfolio. Um, that's kind of what you have to choose for your portfolio, and this goes into risk analysis and how you structure your portfolio for growth versus value. So I guess in a crypto sense, my portfolio is more structured towards value rather than growth. I don't want hundreds of percent gains. A lot of folks, and I remember this very because I myself know the feeling of like, oh, it's going to go to the moon. You get something that's at 50 cents and it goes to $50. People keep talking about Ripple going to like $5,000, $500. Or frankly, even the Digibyte crew wants Digibyte at $1. I don't want 2 cents. I don't want 50x gains. I don't want 2 cents to $1. That's not what you do with a retirement fund. That's you. Let's say, so I'm 37. I know there's a lot of kids on here. So that's another story. If you're young, you could take more risk in your portfolio. If you have $5,000 in the bank, take 1,000 of it and throw it into something that could go 50x, and that's a perfect example. Like Digibyte, that could go 50x, but I have that position sized very well, considering my risk reward, my risk tolerances for my portfolio. I believe Digibyte sits at for probably about 2.5–3% of my portfolio. It's a very healthy position. Can I buy a car with my Digibyte? Yeah. Let's just say that. Buy a nice car with my Digibyte. So Aave, look at this. This is a nice bump. So what I'm starting to see is a bit of a bottom in the crypto space. And this is a place where you could gamble. Like if this was June, this is probably where I'd start to think about throwing around like $100,000 and looking for like an 8% rip on a daily basis. That's a nice rip. If you can make $8,000 on over 24 hours, that's a good deal. And synthetics is ripping too. I made a fair amount with synthetics. I bought at 70 cents. I bought $20,000 worth at 70 cents. That was a good deal. But my sentiment right now is not that it's March, April, May, June, July. This was constantly 20, 30, 40, 50% on a daily basis. I mean, look at this chart. Look at Bancor. How could you not make money with this? You were in trend formation. So this is where you make gambles. This is where you take strategic risks. So this is where you buy, and it rips to the upside. It rips to the upside. It just kept ripping to the upside. Just kept ripping to the upside. And the same with Kyber. You're seeing this from the macro perspective, but it's going to be a little slow to zoom in, so I'll verbally explain. This is a long period of time. This is over a month where it just kept ripping on a daily basis. And look at this. The start of this rip was the 4th, and then you're at the top of the 11th. This was day after day after day of giant rips, 10, 15, 20, 30% to the upside. And that's not what you have right now. So that's easy money. And that's a very interesting experience because the last time the crypto space saw easy money, it was 2017 and the ICO craze and everything was just going up, up, and up. Now we just had that. Is that going to return? That's a nice question. I don't know. And maybe it looks like it kind of wants to. We're seeing some big rips on, it's good to see Energy Web with a 6% rip. BAN, Aave, Compound, Synthetics, Ocean, and even OMG seeing these rips. These are second Cosmos, 2%. This is good to see. Now, does this mean everything's back to normal? Throw risk to the wind, and we're back in money-making mode? For me, no, absolutely not. I have to minimize the crap out of my risk. That is my intent. That is my goal. What am I missing in the chat? Dave says, Real Vision, well worth subscribing. The price, thinking of getting one. If you get a deal on Real Vision, I mean, listen, I mean, just the crypto. If you could just get the crypto, I think there's something just for the crypto shows that Raul and Real Vision just launched. These three right here will change everything about your opinion. And if you show these to parents and friends and cousins and whatever, this should change everything about what you do with savings and how you prepare for the future. There's no reason to keep dollars. Have been destroyed. There's absolutely, if you are taking your paycheck and putting it into a bank account, more like attempting to accumulate dollars, um, pretty much that's the wrong thing to do. Like Robert Kiyosaki, I mean, everyone, Ray Dalio, cash is trash. Listen, look, if you listen to Michael Saylor, if you have dollars in a bank account next year, just like CPI, they want it to run hot, 2, 3, 4, 5%. And then we look at the Chapwood Index, 10%. If you have dollars, you will have less dollars in your bank account next year. Period. You are losing money. Every second of every day, if you put dollars in a bank account, you are losing money. So that means, what does that mean? That means you have to choose, not dollars. And that means you have to make the best choice of what is possible in not dollars. And the fallacy is if you're moving your money out of dollars into something else, it can move up or down relative to dollars, and you're losing dollars. But the reason you feel that is because you're lying to yourself that your bank account is a stable, fixed number. Your bank account is constantly going up and down. And I've talked about this topic on the stream. Everyone looks at their bank account and they think they have $10 today, they have $10 tomorrow, they have $10 a week from now, and if they don't spend any money, they still have $10. But that's a lie. You don't care. You don't give a shit if you have $10 in a bank account. What you care about is how much you could purchase with those $10, and that's called purchasing power. And every second of every day, the amount that you could purchase with those dollars on average is going down quite aggressively. Maybe now much more than historically. And that just is the way it is. Just these people will change your mind. You want your dollars, you want your value not stored in dollars, which means the corporations have a big reason not to be in anything that's inflating. And what's inflating? You're telling me this isn't inflation? I mean, who's going to buy this shit? If you're this is inflated over 100%. Here, check this out. I mean, this is obviously split adjusted, but if you let's say you're a corporation and you're like, what am I going to do with my money? What am I going to buy? Am I going to buy equities? Am I going to buy a stock? You're not going to buy this because now if you have $100, you're going to buy 82% less than what you could have bought down here. This asset has inflated 82%. So your $100 will buy that much less of this asset. And that's the way the big corporations are starting to think. They can't buy equities because they've inflated, and the same with treasuries. When you see the yield on treasuries getting crushed, that's because the price has gone up. So how could he buy a treasury that's so inflated, and people are expecting it to inflate more? And the same with bonds. The yield has been crushed. The yields have been crushed across the board. So the value, the purchase price for the bond has been inflated. So are you going to buy something that has inflated huge amounts of percent over the last couple months, or something else? And this is the choice that we all have to make, just like the corporations have to make. Because the conclusive statement is, don't hold them in dollars. So what do you hold them in, considering inflation? That's the bottom line. Did I miss a Kyber discussion? Hot. Let's talk Kyber. Let's take a look at the Kyber chart. So Kyber's been crushed. This orange line here is a multi-year trend line. Let's pull out to the daily. Let's pull out to the weekly. So this was a multi-year support, flip, resistance, flip, support. So this orange line is a big deal. and it broke to the downside. So I would not get back into Kyber. I would be much more tempted to get back into Bancor because Bancor hit that 786 on the fib, and it's just way oversold. And it looks like it does have some bottom action. But I wouldn't get back into this either. But I'd be more likely to get back into this as compared to Kyber at the moment. Now, it's just very frustrating because from the fundamental perspective, Kyber has ridiculous monetary properties. It's a incentivized supply disruption, the deflationary asset. And that's absolutely remarkable. But unfortunately, technicals override fundamentals across the board. Non-disputable. That's just what it does. So I don't like that it's below the orange line. That is a massive cross-year support, flip, resistance, flip, support region. What I would like to see, and when I would get in, is when it does something like this. It turns support, resistance into support. But even in that case, I'm going to be very, very picky to buy and quick to sell nowadays. So this is quite tempting. Like on a day like this makes me want to look at synthetics and Aave in particular because I could participate with those assets in a DeFi perspective. I pop open 1-inch exchange. I'll get the best possible minimized slippage trade and Kyber. So they're back on my list to look at. You're looking at Kyber, looking at Aave. That's about it. I don't look at synthetics. I don't look at compound. I don't look at the governance assets. Maybe I should look at even BAT too. And I don't look at the centralized stuff because then I'm not going to deposit value on a centralized exchange. We opened this stream talking about Change Angel. We're not going to centralized exchanges, ladies and gentlemen. If we're going to do some trading, we're going to go on DeFi, baby. Woo! 1-inch Uniswap directly if you really want to, but I'm just saying. So NXM is WNXM for the wrap version, WNXM. And I'm sure it's around here somewhere. I'm surprised it's not mirroring the exact same price of NXM. But Nexus Mutual is a big deal. That is insurance for the DeFi protocols. And quite intriguing what they presented from a functional standpoint. So these are back on my radar. So what I'm going to do is I'm going to take a look at the price action over the next couple days. 8% today, down 4%, up 8%, down 4%, down up 8%, down 4%. And if I see some trend, if we see trend formations, like look, this is a beautiful trend formation. And then what you do is look, here, check this out. So, and the price action is up here, and then bam, it breaks through. And then bam, you see a little bit of dip, and that's where you buy. And then bam, you get a 10% rip to the upside. And that's how you turn $100,000 into $110,000. And that's how you get $10,000 rips over a 24-hour period. But you got to minimize the crap out of your risk. I don't want a 10,000 rip to the downside. So right now, if you look at this chart, this is the first rip. And this doesn't mean anything. This is max risk right here. If you're playing this, there's no reason this can't rip to the downside. Look, it already broke resistance, broke support, and there's a massive level of resistance at 36% to the downside. And let's flip through the time frames and see if there's any of my beloved 200 EMAs. So we're below the 200 EMAs. So look, there's a reason why. If you look at it on the 1 hour, look at the candles. There's a reason why it's hovering at this price. Because if you go over to the 15-min, you're clearly at resistance. There is resistance here. The 200 EMA is behaving like resistance. So what you want to see before you get in, before you take $100,000 and make some bets to minimize your risk, you want to see a resistance break. You want to see this break resistance. Oh, look, it's on support on the lower time frames. You want to see the 15-min break resistance. You want to see a break resistance on the 30-min. You want to see a resistance break on the 1 hour. You want to see yourself back into the sim triangle. You want to break that resistance. Then you want to turn that resistance into support. And when you see a resistance flip support and a previous break of resistance, break of resistance, break of resistance, that's called confluence. You have multiple indications that you're in a good position for further upside action. So let's say you're right here. let's say you break your resistance, and that puts you right here where the mouse is, and then also your stoke is all the way down at the bottom. That is a nice so your stoke, that's a nice confluence. So your stoke is all the way at the bottom. You just broke resistance, and you're sitting on a resistance flip support. Ooh, now you're talking. Now you're talking minimize risk and a good high likelihood of upside price action. But this is where you have to be very picky to buy. You just don't throw around money. If you got $5,000, why the heck are you going to throw around $5,000? Why are you going to throw around $2,000? That's big risk with a big portion of your portfolio. And it's tough. It's not easy. I don't have the answers, but what I have is the thought process and how to assess risk and how to balance a portfolio and how to look at the fundamentals which point you in the direction of one asset versus another. Listen, Bancor from a macro perspective, they're going to release V2 at some point. And V2 is going to have governance associated with it. And governance is quite often used to incentivize liquidity or the providing of liquidity. And in compensation, we get governance assets as a subsidy, which is what they've all done, which is what Curve does, which is what BAL does, which is what Sushi did, which is what Uniswap does. It's what they all do with the governance assets. So in all likelihood, when Bancor V2 launches, this thing's going to be a little rocket ship. So Kyber's a little unfortunate in that regard because Kyber, I think that I don't remember. I'd love to know when on the governance asset where the DAO launched, where they turned the governance asset, which is Kyber and was Kyber, into the DAO, which is the voting system. Because I think it went down after the DAO was launched, which doesn't make any sense. Absolutely nothing about this chart makes sense. And the only thing that I can think of that supports downward price action is that it doesn't have the volume of Uniswap and Curve and other and Balancer and other DeFi protocols. Otherwise, the macro narrative for Kyber is extremely bullish, particularly with regard to its monetary properties. This has some of the best monetary properties in the entire crypto space. And this chart does not reflect that. It's not saying, hey, Kyber, you're freaking awesome. So come on, chart, wake up. Show some respect. This is a disrespectful chart. I'm saying that is what it is. Charlie, brother, I appreciate it. Hot Wad, appreciate it. Oh, Duncan, let's look at the Digi. We're running out of time. Let's do it. Woo, look at this beauty. That's a beautiful chart. Now let's get some damn Ren DGB cooking so we can interact with this thing from a DeFi perspective. So Digibyte, obviously, I've talked about it quite often as a fixture of my portfolio. But I can't trade it, because that means I need to apply value or transfer value to a centralized exchange, and Big Daddy doesn't like that. Albeit I get tempted from a change angel perspective, but I want control. And for me, I really like the DeFi control. So if I'm going to throw around some money, I want to press two little buttons. Clicky, clicky. That's how I do a clicky, clicky. The double click of the ledger. That's the gesture. That was the ledger gesture. So, and then you can take bets. But Digibyte has been, so actually, this was actually quite a good bet. He made 30%. This is a really good bet right down here because it was a resistance that flipped support. So, like where would you have placed your bet right here? Oh my goodness, this was so good. Right here. This is where you place your bet. So your resistance flips support, so it broke resistance, support. You're like, oh, right here, you're like, oh shit, it's not going to hold, it's not going to hold. And then bam, you break through the 200 EMA on the, what is this? And this is the hourly. Oh, that's such a bullish confluence right there, guys. Resistance, so you have a resistance, flip support, and a bullish break through the 200 EMA. That's where you take a bet. Picky picky to buy. Look for confluence. And then here's another thing. Let's end on just a couple more points. So yeah, Ledger's a big deal. Ledger's a big deal. Charlie, you mentioned that. So when this starts ripping up, and you're at 5%, 10%, 15%, this is where you start you're selling. You're selling 1%, 1%, 1%, 1%. You're selling the way up. You got to sell on the way up. And then you're like, it's coming down, so you're selling 1%, 1%, 1%. And then you're like, bam! This is a big rip right here. Check this out. Check this out. So Digirip, you're selling 1%, 1%, 1%, 1%. 22% rip to the upside. Woo! And you're selling 1%, 1%, 1%, 1%. You're selling on the way up. You're selling on the way down. And the truth is, you should be out. You should be out. If you see that, like, this is a big red, this is here, like, look, this is probably where you would have gotten out of the last of your position. So you did well on the way up. You sold your 1%. You sold your 1%. You got your gains on the way up. And then bam, there's your risk off. And this is where crypto kicks in. What crypto is known for. It's the big boys, the whales throwing around the big bucks, and they cause the price action swings. And then you're like, oh, I have no idea how much further down it's going to go. And this is where you sell the last of your position. And that wouldn't be bad, because you sold on the way up. You sold on the way up. You sold on the way up, and you locked in all those gains. And where is it? Boop, boop. And so you bought here, and you sold the last of your position, 16.5% gains. Now listen, if you did this with 100 chip, you minimized the crap out of your risk profile, you waited for serious confluence that you were in a likely position for a breakout, and you were selling on the way up. So you're selling in profit. And even on this relatively large rip to the downside, you sold into profit. Every aspect of every sale of the asset you acquired down here was sold in profit. And now you're out. And now you're like, because you don't want to take a chance. Giant rip to the downside. You don't know if it's going to go further down, and you made profits all the way to the upside. Minimize your risk, maximize your gains, exit your position, protect your gains, take your profits. And now, guess what? Now you start over. This is where you start over. And now you got to figure out what the heck is going on. And this is where you reevaluate your position. And this is where you start to get picky. Protect those gains. And truthfully, listen, I love my Digibyte. And frankly, I want to work for Digibyte. I want that to be what I do on a daily basis. But you take your gains in terms of an asset that is likely going to become a treasury asset for corporations and potentially central banks. This is the macro narrative. They're the big banks, central banks, governments. They're not talking about altcoins. They're talking about Digibyte. Digibyte is what it is. Do not fight what is. Do not try and apply a narrative that because something is better, it means it's going to change what is. You have to accept the way things are and work with it instead of fighting it. Don't live on hope. Don't live on fear. Live on truth. Live on reason and rationality and logic, and make decisions accordingly. And that's the way you'll come out a winner from all of this insanity. John says, clicky, rip it good. Always a pleasure, John. All right, everybody, 12:02 on a Tuesday. I'm going to keep these 11:30s going because I got some work. I got some new work that I picked up, and that's keeping me busy at 12 o'clock. And I'm way too busy. I wish I could do live streams all day long. 1 in the morning, 1 at night. That'd be crazy. But suffice it to say, 11:30 going forward. I hope that's okay with everyone, but it's always a pleasure. I look forward to talking to everyone tomorrow. It is 12:03. Noah signing off. I will see you tomorrow. Thank you all for joining. Peace.